Welcome to the Finance Utopia animated video series on finance transformation. A quick and common sense guide to everything you need to know about transforming your finance team without the need for large consultancies and the hype. This is part 2 of our 4-part series. Start with process improvement. Let's recap on the objective of these videos: to cut through the hype and talk in language that we can all understand. We want to help you understand in simple terms what finance transformation is and the potential for it within your organisation. Secondly, we want to help you visualise the art of the possible through examples of transformation in practice. From this, we hope to show you that every finance team from every organisation can set their own vision for a cost-effective transformation. In part 1, we define finance transformation as a change and improvement in the performance of the finance team. When we are using technology as an enabler for this, then digital may be added, extending this to digital finance transformation. We also looked at why finance transformation is a hot topic. This is due to 2 major factors. First is massive data proliferation. The second is rapid technology advances in recent years, driven by the cloud and artificial intelligence, especially machine learning. This results in a current view on transformation. Technology is now seen as the platform that connects people, automates and links processes, connects to, stores and enables access to data. Technology provides the platform that enables transformation. With some additional factors, this has created a perfect storm that is driving finance transformation. Now we've done the recap of part 1, let's look at process improvement and some practical examples. The first question is, why start here? For us, there are 2 main reasons. Improving current processes is the easiest to conceptualize and deliver. The second reason, and vitally important, is that it creates time for the finance team to get their heads above the parapet and plan further transformation. A typical finance team is often split in respect of responsibilities. Part of the team is responsible for day-to-day accounting. The other part of the team is responsible for financial management. Let us look at each of these in more detail. Financial management includes both FP&A and financial accounting. We recognise 5 distinct core processes: entity close, the ERP related period end close activities; group close or financial consolidation; budget plan and forecast performed throughout the year; report and analyse, reviewing results, variances and providing explanations; disclosure, putting together reports and documents for internal and external stakeholders. There are a number of common examples of process improvement in practice, especially where finance teams are using Excel as their main tool. Moving the manually intensive financial consolidation and budgeting and planning processes to a recognised technology solution can bring large efficiencies. The same can be said for reporting and analysis, improving efficiency by providing more sophisticated tools to slice and dice data and present it in different ways. Another example of potential process improvement is around what we call the last mile of finance, assembling and distributing report books to internal and external stakeholders. This can be moved from being manually intensive to being highly automated using the right technology. A less common area, although one that is rapidly developing, is automation of ERP close processes such as period end reconciliations. Examples of this are intercompany matching at a transaction level, bank or fixed asset reconciliations. If we now look at the day-to-day accounting team, there are 3 key processes here: order to cash, the sales cycle; purchase to pay, the purchasing cycle; and the general ledger. These are areas that are gaining much attention, especially with the advances in artificial intelligence and machine learning. There are a number of software vendors delivering solutions around accounts receivable, improving the allocation of cash and automating debt collection processes such as email sending. This is repeated within accounts payable, again automating cash matching and matching to purchase orders. In respect to the general ledger, there are solutions that are capable of calculating and then posting journals to underlying systems, such as accruals and prepayments. For those organisations that have millions of transactions, significant process improvements within day-to-day accounting can be achieved. So, where to start with process improvement? This will differ between organisations. However, in our experience, the most benefit can be found within the 5 core financial management processes. There are 3 reasons for this. The first is that this is where the highest concentration of qualified and more costly staff sit. These are the staff who need to be freed up to work on further transformation. The second reason is that any day-to-day accounting changes can be related to the underlying ERP or accounting solution and can be difficult to move forward quickly and without time-consuming discussion. The third, and possibly the most compelling reason, is that improvements here are most visible to those outside of the finance team, thus helping to gain confidence and buy-in to further transformation. In summarising process improvements, start with automation. You may hear the buzz phrases robotic process automation or software robotics. Within this, concentrate on making the core financial management processes as automated and efficient as possible. This is what I call getting the basics right. This will then create the time for the finance team to look at further transformation. This leads us nicely to part 3 of our video series, effecting change in the organisation.